Hello everyone, I'm Marty Pospisil and welcome to my August 2025 market update. I hope you're all enjoying this great summer we're having in Vancouver. It has been glorious out. Water temperatures at 20 degrees, we've been in the mid-20s, a little bit cooler today, but this isn't the weather report. This is the real estate market update for Greater Vancouver. So let's pop right into it and give you some of the stats. Here's my table that I've put together. Prices have stabilized. We're not seeing any major increases, any major decreases. If you want to break it down in terms of activity, for detached houses across the board, we're seeing just over 4% drop from activity from this time last year. Benchmark price about 3.6% on Greater Vancouver, drop in detached houses year over year. Last month, about a 1% change, so nothing too dramatic there. Townhomes and half duplexes, interestingly enough, on the other hand, are up in activity year over year. Down about 2.3% from this time last year, and just a negligible drop in pricing over the last month. Attached apartment condos down about 3% in activity, down about 3.2% prices year over year, and a negligible drop over the last month. So we're not seeing a lot of changes in price right now. We're seeing the status quo. There's a lot of product selling. There's a lot of people out there buying. There's some people waiting. There's some people who haven't listed yet. So we're seeing that inventory level off as well. So I'll jump into that in a little bit more detail shortly. Let's look at the market speedo. Oh, now this is not the market Speedo. That's Walter Goggins wearing a Speedo. That's not what I wanted to show you. Let's go into this market Speedo. Not sure how that got in there. But if we look at the real estate market Speedo, love Walter Goggins. He is an amazing actor. If you watched any of his series, including White Lotus, he's an amazing actor. Again, don't know how that got in there, but I have nothing but praise for that man. But I do not stock photos of him in a Speedo, if that's what you're asking about. Somebody snuck that in my presentation. I'll find out who. Total listings are, of course, up for Metro Vancouver. Total sales down. Sale price 0% change. So exactly what I'm saying. From the speedometer, we're at about 13%. So we're into that balanced market territory for activity. No surprise there overall. Now, let's look at the different product. I can't get that photo out of my mind. Let's look at the different product using our sales ratio metric that will show us how active each product category is in each area based on the percentage of product that's selling over a monthly period. So over the last month, if a particular product and area were less than 11% sold, we are in a buyer's market. If it's between 12 and 20%, we're in a balanced market. It's not favoring the buyers or the sellers. But if we're over 21%, which none of the markets are now, by the way, we're in a seller's market. There's upward pressure on that pricing. Buyer's market, downward pressure in the pricing, and status quo, 0% where we are now in that balanced market. Okay, let's look into each. Detached houses, Vancouver West Side. You can see what's happened since the beginning of the year. Predominantly buyer's market territory, last month being 9%. Let's bring up the stats for this month. We're at 8%, so not much change, still in that buyer's market territory. Mind you, the homes we've sold have all been in multiples, all above list, so there's lots of demand out there for detached houses. So that's interesting. Condos, townhomes on the west side, you can see we've been in a good balanced market for most of the year. Let's bring up those stats from last month. We are at 17%, so no change since May in high balanced market activity territory for condos, townhomes, Vancouver West Side. Okay, let's go to the downtown area. I split that off. A little bit less active downtown than we are on the west side. We are just at the top end of that buyer's market category. Let's see what's happened last month. No change there. Surprise, surprise. Still buyer's market right at the top rung, just before balanced market area. We're going to be looking at 11% sales ratio. Again, no change since end of May. So if we go into detached houses on the east side, let's talk a little bit about those. For the year so far, we've been in that balanced market, top of the buyer's market territory. Bring up the stats for the last month, 9%. So we are indeed in that buyer's market territory for houses on the east side. If we look at condos on the east side, it's been our most active product and area. We're at 20%. So we have bumped up from July, which was at 18%. We're almost in a seller's market for condos, townhomes on the east side. Very interesting, but right now, right in the top rung of balanced market for that product. Okay, overall, if we're looking across BC, we've got all these swings. That's from early 2022 when we saw that. We saw that bump last year. We saw activity growth and then some drop. And here's where we are, still in that balanced market band throughout the province. What's happening in prices? If we're looking at our average price graph, again, still, we're about 10% down on all product. In some areas, 5%, and some areas, 10%. Product is down from that peak. So pretty close. If you take your assessed value from last year, pull off about 10%. That's a rough guide on where a lot of the product is selling now. Unless we're generating multiples, then it's being pushed well above. So that's the key today in that approach for marketing, etc. If we look at the 5-year trend for detached townhomes and apartment, same idea. We're about 5 to 10% down from that overall peak. You can see that trend for all product. Okay. What's happening in the burbs just outside of Vancouver? If we look at detached houses, you can see the sales ratio. In green are all the increase in activity, and in red we've got decreased activity, predominantly more green than red on detached. So you can see that detached market is starting to build up out in the burbs and working its way into Vancouver. For attached product outside of Vancouver, again, predominantly green. This is kind of like a weather report. We got a green front coming in here to the lower mainland. Very few drops in activity, mostly an increase, and that's kind of the telltale sign of our market right now. We're all at the verge of that activity. We're just waiting for a reason to move forward, whether it's an end of the tariff discussion or a drop in rates. We need a catalyst to sort of release that and get that going. Okay, so look at average price. Again, if we post that compared to today, we're about a 10% below across BC from where we were this time last year. And if we're forecasting into next year or into fall towards the end of the year, we look at our market deterrents, transitioning, or market enhancers. Now, I had this as transitioning in orange in my last update. I'm dropping it down to red because of the tariff discussion that's going on between us and our neighbors. That's brought back that consumer confidence a little bit. That is definitely a market deterrent right now, holding some buyers off from making that buying decision. Inflation's behaving well. That's a market enhancer. We're at 1.9% now for inflation. Cost of borrowing hasn't changed in the last few months a lot. We were hoping we would see a drop at the end of last month. We didn't. And inventory levels, they've plateaued. We're not seeing a big increase in inventory. on any of the product. So those are all green. We've got a little bit of apprehension and uncertainty, of course, in that consumer confidence. So all of those things are determining how active our market is. Of course, the EU has reached an agreement with Mr. Trump down south. Congrats to you guys. We want to be on that photo next month, reaching an agreement so we can put that issue to bed and move on. So changing daily, there you go. Depends on the mood of one person when they wake up in the morning. But we won't get into that. Unemployment rate for Canada, we're at 6.9%. For BC, 5.6%. You can see those drops just recently, a good sign. And another sign on how well our economy is doing. We don't seem to be slipping and needing much help from the Bank of Canada at the moment. Probably why they kept that rate the same, the overnight rate. We'll get into that. BC retail sales, they've been increasing since last year, so that's a good sign. The GDP seems to be on a steady growth rate. There's no alarm bells going off there. Like I said, our economy seems to be doing well enough, does not need any assistance. Same with the US economy. Interestingly enough, with all that's going on across BC, if we look at activity, it's a bit of a roller coaster ride depending on the mood and the flavor of the day. Consumer confidence, still, we like to look at the rental rates, and that's always a good sign with what's happening out there in the market. And you could see those rates slightly increasing. There's last year in gray above. Last month, the average rental rate was $2.84 a square foot. We're at $3.01 a square foot, so that shows that increase in the rental rates as well. Commercial real estate has done extremely well and is increasing. It's an improved environment for commercial real estate. That's a good sign as well. So there's a lot of positives going on. But when you open the paper, well, who opens the paper? When you go online and read some of the articles, Korea cuts 2025 forecast again. Look at that, Toronto. Then you look at extended open house for Etobicoke bungalow catches buyers on their way to other homes. Home near Scarborough Bluffs. Well, I just want to point out, when you read these articles in the Globe, they're all Ontario-based. They're all talking about Toronto and the suburbs around Toronto. Well, hang on a sec. Let's just freeze frame that, because I don't want to know what's going on in Toronto. I want to know what's going on here in Vancouver. And I don't know why, but they don't seem to be giving us a lot of coverage out here. And then I did a bit of a dive into that just to see what is different between Toronto and Vancouver. Well, check these graphs out. The first graph is the months of inventory. So that's how much backlog in volume of listings is building. Toronto's in orange. Look at that. They've got about 210 months of supply, whereas Vancouver's got about 120. Significantly more listings sitting on the market not selling, predominantly condominiums, but detached houses as well. Let's look at the MLS Housing Price Index, the composite index of Vancouver versus Toronto. Now look what's happened in the prices in Toronto compared to Vancouver. So I will stand true and say the Vancouver market is faring much, much better than the Toronto market. So don't let those headlines scare you. Toronto is not Canada. Toronto is Toronto. So what you read, look at where it's from and what markets they're talking about. We've talked about the GST rebate program that was announced back in May 27th, where first-time buyers get that GST rebated. That's helping the pre-sale and new product market, of course. Let's talk a little bit about inflation and what TIF and the Bank of Canada are doing. Inflation's at 1.9%, a little bit of a tick upwards. It was at 1.7 last month. The Canada overnight rate is still at 2.75, no change there. And the Bank of Canada held it because they said the economy is doing strong regardless of the tariff discussion. And also, the Bank of Canada does not want to push up inflation through monetary policy. So if they lower the rates too quickly, we might get inflation going up. They don't want that either. They're only going to do that if they need to prop up the economy, is my understanding. So inflation being at 1.9%, they're leaving that door open for more cuts later in the year if and when they need it. So looking at consumer price index or inflation, we're at 1.9%. That's the Bank of Canada happiness band between 2 and 3%. We're right at the bottom of that. So we've got a little bit of breathing room. There's no need to panic, but they don't want that to be shooting upwards. So that's kind of the things that I think they're watching as well when they make their decisions. On how we compared to the Fed, you're reading a lot about Mr. Powell there down south having certain challenges in his job, but their U.S. inflation rate's at 2.7, significantly different from ours. Now, last month we were at 1.7, we've gone up 0.2%. Last month they were at 2.3. They've gone up 0.4%. So that's really interesting. Their inflation seems to be climbing. Their overnight target rate, ours is 2.75. They're at 4.33%. So we're still pretty close, but we might see some things happening here depending on what happens over the next month. Cost of borrowing in general, remember I went through how each of these different rates are affected. The variable rates are a direct function of the Bank of Canada overnight rate. So when they do drop 25 basis points, you will find those variable rates following suit. The fixed rates are a little bit more complicated. They're a function of the economy and the bond yields. So if the bond yields drop, we might see some fixed rate drops, but they're not going to be as large as the variable rates. So I talked about that the last couple of months as well. Overall, here's when we were peaking in those high rates. Here's the forecast. We're looking at that 5-year fixed, maybe a slight drop, not much, but the variable, we're looking at some significant drops if that overnight rate continues to drop later this year, which is the forecast. So mortgage rates looking pretty good. The buying power for today's cats, if we look at 3.99% for a 5-year rate, it's about $527 per 100K borrowed, or $5,270 for $1 million when you're out looking at property to gauge what your mortgage rate would be. No change there. The rates are holding pretty steady, just like the inventory, just like the prices. A lot of people are away traveling and on vacation. That might be part of it, but we're going to sail right through August pretty well the same, with about the same activity. And if we look at inventory, west side houses, you can see we've plateaued out. The same with west side condos and townhomes, no increase there. East side houses, no increase there. And east side strata, a bit of a drop in inventory there. So we don't typically see a lot of listings come online in July and August anyways, so that stays in line with our annual cycle. So inventory pretty steady. If we're looking at active listings across BC, those of course have increased outside of the Lower Mainland. What's next for prices? Okay, we've done lots of sales this past month, a lot of happy sellers. Uncertainty, as you saw last month, has been replaced by some certainty. And then of course, we had the tariff discussion flare up again, so that disappeared and went back to uncertainty. But I'm hopeful that maybe some certainty comes back, or where are we in all of this? That's the question. It kind of flip-flops back and forth, and people are watching this trying to figure out what to do. That, in conclusion, is what we're dealing with now. So I'm following mortgage rates, inventory, and consumer demand. The Bank of Canada rates, they are likely to drop this fall, and we're hopeful that that's going to happen. They'll bring those variable rates down. That's a good thing. Inventory levels have stabilized, and actually, when you look at it, it's a good thing. There's great selection out there of product. We were showing some homes over the last few weeks and condos. And there's a great inventory of items to look at out there and to buy. So that's good. You don't want that inventory to shoot up, because then the supply goes up, the demand is constant. That can affect prices. So everything's holding steady. In conclusion, we've got some continued uncertainty. Many people are waiting to see how this tariff battle resolves itself. We're hopeful it's going to come soon. And the overnight policy rate drops are certainly going to spur some activity as well, as money becomes cheaper and inflation is remaining slow. But we've got a lot of demand pent up, like that dam is full. And when they open that up, whatever's going to open it, maybe a resolution to the tariff discussion, we reach an agreement, followed by a rate drop, that could be what we need for those floodgates to open up. So at least for now, we're in a holding pattern until September, and September is our next cycle. September, October is typically our next busy period, so I think we're going to see some good activity over that period as well. That's my market update for August 2025. I hope you enjoyed it. You can watch this video on YouTube, Instagram, and Facebook. And if you prefer to listen, I know some clients say they listen when they're in the gym. I think that's awesome. YouTube, Apple Podcasts, and Spotify. I'm Marty Pospisil. Enjoy the rest of this awesome summer we're having, and I'll see you guys in September.